Good morning and welcome back to Almus Market Mornings. The dollar sank to its lowest since early 2022 after President Trump indicated to some reporters in Iowa last night that he's comfortable with the currency's decline. Trump's comments were seen as giving a green light to traders to sell the dollar, as they suggested that the administration is in favor of a weaker dollar to boost their exports. The dollar's drop has been fanned by Trump's unpredictable policymaking, which has rattled overseas allies and investors, and has come despite a rise in government bond yields and expectations of a pause in the interest rate decisions in the Fed's interest rate decision meeting tonight. Good morning, JK. Do you think the rupee will react to this slump of the dollar and which will set a new downtrend?
Good morning, Ishan. Yeah, that's the $64 million question. Uh, I think if you look at the rupees moves in the last 1.5 years, it's moved very independently. Last year, dollar index fell over 10%, but the dollar rupee was also up by 5%. In other words, rupee was weaker by 5%. We're going more in terms of our own macros, and particularly on the external front, which is not very favorable. There's been challenge to export sector due to higher tariffs, and we have the uh, outflows from FIs just continuing into this year. Uh, Equities have seen nearly 19 billion of outflows last year, and this year it is almost touching 4 billion. So without these factors favoring us, I think it's difficult to see rupee participate in the dollar's weakness. At the same time, of course, as dollar weakens more, rupee gets more and more undervalued. RER terms, we could be well near 93 now, and that could make some investors think whether the rupee is still worth selling, because rupee commands a high nominal interest rate and also a high real interest rate because inflation has been very low and market has been selling rupee incessantly for quite some time. So there could be some some retracement for the USD INR, and particularly if we do see the previous highs like 91.90 or so, one would be, reasonably well off to take some short position or at least cut down the long positions, which is what the market is likely to do. They may not take a long position in the rupee, but at least they will cut down the short position in the rupee if we see an uptick. And speaking of dollar index itself, yes, Trump's statement kind of, it is the same thing what we have seen in the past, a benign negligence of the dollar's weakness is what we can ascribe his statement to. And he said the dollar is doing great, which means the dollar is weaker, but it's still doing great. They're okay with the current levels. And also his statements have also preceded the last few days about reports of Fed checking rates on the dollar yen, along with the Bank of Japan. Dollar yen itself has fallen from 159 to 152. So this is just a continuation of the recent trend. And in fact, a continuation of the larger trend that started early in 2025 February, and we had seen the dollar index move from almost 104 to 96, and then we had a long period of consolidation. That consolidation has really now broken out as we broke 96 levels on the dollar index, 1.1950 on the euro. These are very crucial levels, and these have been broken. And I believe we are in a new uptrend for the euro, new downtrend for the dollar. And this time around, it is not just the euro that is moving. GBP has been moving. Yen has been participating. We have the commodity currencies like Australian dollar and Canadian dollar also participating. So there is a secular move in the dollar. Just to quote another perspective, Korean won, which has been quite an underperformer, along with the rupee in the last 1 year, despite their stock market doing extremely well, is also now stronger overnight after the various global developments, and it is now trading at 1430 versus 1451 that was seen yesterday. So I think this new fresh dollar index weakness can have some marginal impact on the rupee, but definitely market will wait for whether there is an improvement in the flows, particularly for the bond market, and also the impact of a budget, which will be presented on February 1st, which happens to be a Sunday. I think there will be a gradual move down in the dollar rupee. It may not start a new downtrend for the rupee. And also in favor of euro, or you can say against the dollar, was also the consumer confidence in the US that collapsed in January to its lowest level since May 2014. It came at 82.2. And in fact, the present conditions also was lower. Employment conditions and labor market differential were the top in the minds of consumers who were surveyed. So that's another, indication of the sentiment, consumer sentiment falling in the US. A lot of spending bills have been stalled in the Congress, and particularly pertaining to the homeland security. If that happens, that's another negative for the dollar, because it's for being a leading economy of the world, and being a reserve currency. If we do see the government shutdowns and policy paralysis, then we could see further aversion to holding the dollars, which is anyway already seeing some sort of a sell America trade emerging. So this is another negative that is playing out. FOMC tonight becomes a sideshow, actually, because it's a foregone conclusion that they will hold the rates unchanged. We don't have a dot plot or any new fresh summary of economic projections from the Fed. From the Fed. Interesting points will be what Powell says, particularly in the light of the recent developments where this subpoena has been issued for him, and this illegal proceeding is going on, and his own statement that Fed has been feeling some pressure from the government. And we'll also be interested to see how many dissenters are there in the rate decision. So these will be the important point from FOMC, apart from the rate decision. So of course, market will make its own assessment from Powell's statement based on the labor market developments and inflation, whether there will be a rate cut in the middle of this year, currently being discounted. So market is discounted 2 rate cuts this year. The last dot plot, of course, indicated only 1 rate cut this year. So technically, dollar looks headed much lower after breaking the previous low, and that one should contend with this trend continuing for some time now. In the meantime, even gold has made a new all-time high at 5,222. On the rupee, coming back to rupee, we also had, the Europe India trade deal that has been signed yesterday. Of course, the effectiveness of the trade deal will be only next year. It's a very comprehensive deal coming after a very long time. There is a proposal to cut tariffs from both sides. There will be boost for Indian exports into Europe, and also there is a significant medium-term FDI flows, and more importantly, a geopolitical heft that is gradual and not immediate. So India has already signed several free trade agreements in the last few months, and notwithstanding that, we still have the US trade deal, which is eluding us. I think most countries are now diversifying their own trade relations, reducing their dependence on the US gradually, which of course is not possible in a big way. But at least, diversification is something that every country is trying to do. And that's what has happened. And India being chosen as one of the important countries to conclude a trade deal for Europe, is definitely significant. I see some sort of a long liquidation on the USD INR if we do see it 91.90 levels or 91.80 levels on the downside. I see it very difficult for it to break the 91 levels unless we see some very large flows. All said and done, now we are into the two big events. One is the FOMC. Of course, I've already mentioned that the rate decision itself is not going to be very significant. And of course, the budget, where there is a mixed view because about budget nowadays has is more kind of a statement of revenues and expenditure by the government rather than any major policy decisions. Major policy decisions are taken as and when conditions warrant outside of the budget. And of course, if there is some relaxations for the taxes, that is what the market will be looking ahead to. Thank you.
Thank you, JK. And just to summarize, the rupee moves independently due to its own factors, such as the challenges in the export sector and the trade deal uncertainty, and of course, the continuous negative FII flows that we've been seeing since the start of the year. But that being said, some retracement can be seen because of this dollar slump. And this just seems like a longer continuation of the trend that started in Feb last year for the dollar index, as you have now broken the 96 level and has led to a new uptrend for the euro and a downtrend for the dollar. When it comes to the FOMC meeting tonight, it has become a sideshow because we're expected to keep the rates steady, but we have to keep an eye out for what Powell says due to the recent pressure on the Fed chair. And a long comprehensive deal has been signed between India and Europe, but the effect of this we will see only next year. And it's a good indication. Hopefully, maybe this will lead us to signing the next deal with US soon. And the dollar is expected to head lower from here as we have broken the key levels, which is taking the precious metals higher as well. Thank you all so much for listening, and we'll catch up tomorrow with a fresh round of updates.